Okay. Hello, Ashwin.
Hello.
I wish we were talking in better times, but unfortunately, the situation around Russia and Ukraine is posing some kind of uncertainty and volatility. And I want to have your take on that, your strategies around markets when they are highly volatile and uncertain. Would you speak to that, please?
Definitely, Jesse. Thank you for inviting me again for this video. Today's video is a critical piece of evidence that proves that wealth can be created amidst a war. And no, I'm not talking about buying gold or the US dollar or bonds. Over the last 72 hours, our private clients have made 150,000 US dollars doing high frequency trading, buying a European company whose business is virtually a monopoly. Now, high frequency trading, Jesse, also known as HFT, is a method of trading that uses powerful computer programs to transact a large number of orders in fractions of a second. Fact, today, high frequency trading represents about 50% of trading volume in US equity markets. In European equity markets, its share is estimated to be between 24 and 43% of trading volume, and about 58 to 76% of orders. We are the first to introduce high-frequency trading, Jesse, for the retail clients.
Yes, I was just about to ask you, because of the amount of people doing high-frequency trading, who do we go to engage in it? How do we participate in it?
I will come back to that point in a second, Jesse. You see, in the market, high frequency trading, you require a committed capital of 20 million US dollars.
Exactly. I was thinking the same.
Yes. So as I'm going to say now, we are the first to introduce high frequency trading for retail clients, Jesse, with a minimum committed capital of just 100,000 US dollars. Okay.
I understand that you are doing high frequency trading for your private clients.
For those clients, our minimum is 3 to 5 million.
Yes, I understand that. And I'm very curious as to how you are able to offer this to your retail clients when I'm sure this involves a lot of your attention, your skill, and your time.
Yes, Jesse. Now, as I've said in my previous videos, this retail section of ours, which we introduced in August 2020, is in a way to give back to society. So our high frequency trading for $100,000 is also a way to give back to society, because we understand otherwise the retail clients for 20 million or even 5 million will never get a chance to experience this form of trading. So
but I must say, I must say that it would appeal only to clients with a higher risk appetite.
Yes, even though it's 100,000 minimum,
yes,
they have to be prepared for a paper risk scenario. I'm not saying it's going to happen, but they will be prepared at the back of their mind for a paper risk scenario of 20 to 40%.
So if I pull back the camera,
yes,
and look at this war scenario,
yes,
everything is, balls up in the air, and there's fear, and you can buy the fear index or the volatility index. So why do you choose high frequency trading?
You see, because Tessie, even though the market is like this, like you say, fear index, gold, US dollar,
yes,
bonds, uncertainty, people are running for cover, what we call safe haven.
Yeah.
You will be extremely surprised to know there are a lot of companies that are going up in price as the market tanks in the US.
Is that right?
Like I just said, our clients in the last 72 hours made $150,000 in a falling stock market in the US. They made 150,000 US dollars buying a European company that has got a virtual monopoly in its field of business. They bought the stock in a declining market. Aren't you surprised?
No, I think you are in keeping with your strategy of buying good names and staying with the mega trends.
Which I will come to that later as to what is our criteria. But what I'm trying to show our viewers here today is that there is money to be made when stock market is dropping.
And I'm almost, you know, seeing a little gremlin on somebody's shoulder, telling them that this manipulation is like really good news.
We don't call it manipulation. The reason we are able to do this because we have an algorithm. So let me summarize this, what I just said. So from here, you will see that in high frequency trading, market direction does not matter because we have made money for our clients when the stock market is dropping.
Yeah.
Okay. So what does that tell you? How is that possible, right? Stock market is dropping in the US, and here we are buying a European stock that is going up in value in a declining market environment. How is it possible?
I've seen TV shows, movies where the terrorists actually have their market man behind doing the market maneuvers when they are, you know, on the attack.
But Tessie, this is something else. What I'm trying to prove to viewers here is that
blows my mind.
In the midst of this unrest, in the midst of this volatility, there is a stock that is going up, and this caused our clients to make $150,000 USD. Now, how is it possible? There are so many stocks, right? There are more than 6,000 stocks in the European and US markets. So we'll go crazy monitoring, right?
Yeah.
So how do we do it? Let me explain to you how. Okay. Our high frequency trading system, inside our algorithm, which is called human quant, that is 75% artificial intelligence and 25% human brain. Right. Which makes it even more dynamic in volatile markets. So the algorithm will, through data mining, it will analyze the optimum risk-reward ratio for a high-frequency trade after it has identified the candidate for high-frequency trading. Okay. So 1 month ago, our algo identified this particular company in Europe as a high-frequency trade candidate. Right. So we didn't believe the algo. We tested it. For 1 week, we tested it, and it was fantastic. Regardless of market direction, Tessie, this company goes up 10 to 30 euros per day. Wow. Let me remind you again and repeat myself. Yeah. In a declining market environment, as we record this video today, this company has gone up 10 euros today alone. Yeah, I've been present to your meetings where the client brings to you stories or tips or, you know, what they read over the news or pick up from friends to say, you know, I want to invest in this. This is a good buy. And you would say, no, the risk is too high. Because, you know, Tessie, why? When you have a high frequency trading system like we have, I tell you, and I'm not boasting, we do not look at headline news. We do not, the headline news, let me explain to everyone. The headline news doesn't move markets permanently. The headline news only causes a knee-jerk reaction for a few minutes or hours or whatever. What we are concerned with is the kind of news that moves markets over the next 2 weeks. So when you are in our position, Tessie, when you have high frequency trading, you're looking at your algo saying this company is going to go up no matter what, regardless of market direction. And we tested it for 1 week. It was moving 10 to 30 euros a day. It would open lower, go up 10, 20, 30 euros, and then drop again. So every day you just sit down there and you buy the company when it drops, and you liquidate when it goes up. What can I say? It sounds good, solid names. Yes, and long term. That's what I'm hearing. So let me explain to you what, when you say good solid names, what we mean. For high frequency trading, we follow a very strict criteria which we program into our algorithm. Okay, a top class. So what's the criteria? It's a top class blue chip company that is a leader, is be a leader in its field with low or no debt,
Right.
a healthy balance sheet, and a pipeline of goods and services that are in demand.
So does
can
it
you
have to
see
sit
how
under a mega trend?
it's part of a mega trend, yes. But you see, because the markets are volatile, the mega trend comes later. The mega trend will come 3 to 6 months later. We are talking day to day.
Right.
But
So I
for a
think
company
it's
to
really
qualify,
important
yes,
that an expert like yourself is sought to, to assist and for support, because it's really like the chart behind you suggests, woo,
it's high
really
frequency.
volatile
Okay,
and
why I tell you it's
uncertain.
dangerous is this: if you don't get out in time because of you are in a meeting or you don't want to let me do it for you or whatever, this is split second timing, because 1 minute a day and the market will be down 2%.
So tell me, what are the yields? What's the upsides that we're looking at?
Today we kicked off our first high frequency trading trade for retail investors. Our private clients have been making $100,000 in the last 72 hours on this high frequency trade.
So
but
within
today
72
we had
hours,
our first retail clients. Our first retail client in 34 minutes. I'm proud to say today, that is the 2nd of March, our first retail client for high frequency trading, he made 5,000 euros in 34 minutes.
Oh.
Okay.
And I'm supposing that he left it all completely to you.
Yes. So what
because the timing is so critical.
What we did was we bought when the market opened at 4 p.m. KL time, Singapore time as well, KL Singapore time, and we liquidated at 4:34 p.m. and we were up 5,000 euros. I mean,
Wonderful.
This is real. This is not a stupid story. This is not a, just to attract people. It's real. So what I'm trying to show you here, that, like I said, this is a very critical video today to give you evidence that there's a war. Okay. And at that time, when we did this trade between 4 and 4:30 Singapore KL time, the Dow Jones was down 30 points. Nothing was happening. People were waiting for further news. So I'm trying to show you, like I said, there are a lot of things happening. If you can give us the mandate to do things for you where risk is concerned, there are a lot of things happening on a day-to-day basis, even though the major markets are down or nervous.
I'd like to say also that you're appealing to a peculiar kind of investor, someone who knows the market sufficiently well. They're not like complete greenhorns, so that they are able to work hand in glove with you to decide on and to plan on the outcomes. Okay,
I must correct you there. I think you don't have to be a super experienced or super knowledgeable about the market. What is important in high frequency trading is you have to decide, can you handle that level of paper risk?
I see.
And I'm not saying it'll go wrong, but if it goes wrong, if the schedule derails, we may have to wait 2 to 3 days or even 5 days before the market comes back to our point. Sometimes it can happen. It has not happened. I'm just giving myself the benefit of the doubt. So they have to be prepared for this kind of things if they happen. But the most important thing is you don't have to be experienced about the market. No. How much paper risk can you afford? We're back to square one again. For high frequency, it is super high risk. It's 20 to 40%.
Well, take me, for example. I don't know a lot like what you know, but I know enough when you call to say, would you like to get into this and that? And I know that that is along, you know, my objectives.
So if you tell me you're comfortable with 20 to 40% paper risk, and you have $100,000 US committed capital with us, go ahead. We can go ahead. You don't have to know, because we will hold your hand. Like I said, our algorithm picks the candidate. We have a criteria. We do not trade penny stocks, and we do not trade meme stocks. I'm sorry, but we laugh at people who buy meme stocks, because it's like going to the slaughter and saying, today I die, or I put a bullet to my head and say, today I die or I don't. We don't do that kind of trading. We don't do that kind of investing.
No, I'm all for working with an expert, because you can't do everything. That's why we go and hire experts to, to complete the story.
We are the only ones offering high frequency trading for a committed capital of only $100,000 US.
And for your
Nobody out
private
there is doing,
clients, and
sorry,
for your private clients, your minimum committed capital is?
3 to 5 million for high frequency.
Uh-huh.
Yes.
Okay. But those numbers were really attractive when you said yields over 74 hours.
72 hours, basically.
72 hours.
Over the last 72 hours, they've made 150,000 US dollars.
Yes.
That's our private clients who have between 3 to 5 million committed capital.
That's amazing.
Yes.
Because otherwise, in a normal trade, one has to wait at least 6 to 8 months, right?
Yes, yes. But you see, in high frequency trading, we boost up the amount. We don't buy 10, 20 shares. We buy 50 to 100 shares.
Yeah.
It's a different ball game. It's
so I should say that it really takes your kind of expertise, your level of expertise.
Well, like I said, I don't have to do this. I'm doing this to prove to the man in the street that we can even do high frequency for this kind of level, $100,000. We are pushing our buttons. We are pushing ourselves. We are really pushing ourselves to go to the next level.
Well, if you have a list of A listers, then you can actually put us, like the smaller retail investors like myself, onto some of the bigger trades so that we can also benefit.
That's what we are doing.
Right.
We did another high frequency trading today, but you see, in high frequency, there are different candidates. Some candidates move up aggressively in 1 day. Some candidates move up aggressively in 3 to 5 days. Some candidates take 1 month to move up.
So do you have a story as an example?
I can't give names, but for example, oil companies, they're also high frequency candidates.
So what about like people like BlackRock? Do they jump in and do this as well?
Everybody in the market does high frequency, but the minimum is 20 million, 30 million, that kind of thing. The point here I'm making is that we are the only ones to do 100,000 minimum committed capital. High frequency is nothing new.
I should say you are very committed and brave.
The market uses high frequency on a machine-only algorithm. The second thing that we differ from is that our algorithm is not machine-only. There you go. So firstly, 100,000 only. Secondly, our algo is not machine-only.
Right.
So it's different.
So is there anything else you'd like to say, and perhaps tell us how to contact you?
So for this high frequency trading, our fee is $5,000 for the subscription in 12 months, for 12 months.
Right.
And once you make a profit on the high frequency trading, we will charge you a 20% performance fee for our hard work. I think that's fair.
So that differs from the other normal trading.
For normal trading, where we buy 10, 20 shares for you, we don't charge you 20% performance fee. For high frequency trading, we'll be charging you 20% performance fee.
Because the yields are so much greater, and
it's such hard work for us.
Yes.
To select the right candidate for you.
Yes.
I mean, I think it's only fair.
Yes.
Before I sign off, I will tell you something very, very interesting. As like you said, it's war. Everybody's uncertain. Everybody's scared. Markets are dropping.
Yeah.
So guess what? BlackRock has said that market expectations of rate hike have become excessive. This rate hike phenomenon thing has become excessive, and they are buying. Listen to this: BlackRock, the biggest money manager in the world, is buying equities. I mean, this is the message for those who think that market's dropping. There's a war now. Stay away. Well, here's news for you. BlackRock is buying equities. BlackRock says, tactically, we are overweight equities amidst solid economic fundamentals and historically low real rates. Bond yields may be going up, but real interest rates minus inflation are coming down. In summary, BlackRock says this: the Russian invasion of Ukraine is a human tragedy. Okay, we now know that what we are dealing with: a protracted standoff between Russia and the West. We also think it has reduced the risk of central banks slamming the brakes to contain inflation. So what BlackRock is implying is the Fed will become less aggressive in its rate hikes. And once the Fed does that, the stock market has a beautiful excuse to launch a rally. It's very interesting. And we are able to look at all these things, Desi, because we have an algorithm. We are sitting on top. We are sitting on top of the Star Trek deck. Okay. BlackRock says we are tactically upgrading developed market stocks as a result.
So what I noticed you say is pretty much in the future of what's expected to come, whereas some of the market research is about what has already happened.
Correct. You see, another difference between us and the world out there is this. They look at headline news. That's
pretty unique.
They look at headline news for things that have already happened. We look at we don't look at headline news. We look at news like this for preparing for what is going to happen.
Yeah.
The market may be panicking now. I'm telling you, BlackRock is buying equities. Real. Excuse me. This is real.
And you have to be so piped into news wires to know where the hotbeds are.
This is where our algorithms data mining kicks in. 24-hour data mining, 24/7.
Right.
So with that, can you see, Jesse, how
amazing
the whole concept? It has taken us close to 12 years to develop this whole thing.
Well, congratulations. I mean, thank you for assisting retail investors like myself, especially the women investors who, want to make this extra money to go and buy our shoes.
It's nice, right? I mean, if you make per trade, you make between 2 to 3 or even 5,000 euros.
Yeah.
Okay. 5,000
nice.
euros. It's a lot of money. You can buy enough shoes.
Thank you. So how do we contact you, Ashwin?
My email is ashwin@ppchk.net. And on the WhatsApp, it's bit.ly/algotrader. Okay. And on YouTube, our account is bit.ly/algowealth, our YouTube channel. Please do come to YouTube and watch our videos, and you can see what we have said in the previous videos.
Well, I think it's worth looking Ashwin up and discussing your personal portfolios. And I'm sure he can custom design or something that's bespoke for you. So with that, I'd like to thank you, Ashwin, and everyone for watching.
Thank you. Thank you.